Thank you for joining me. I'm Alex, and I would like to have a look at Twitter today. So what they do is Twitter, almost literally. Their price currently is $29.62, which gives them a market cap of just under $23 billion. Their dividend yield is 0, and I assume it's going to stay there for at least a few more years. I really don't think that they're going to pay a dividend in the near term. I think that if they were to pay a dividend, it would be maybe 10 years out. Current revenue is $3 billion, which is up 25%, and current earnings is $1.2 billion, which is up 1,300%, or rather, they went from negative $100 million to positive $1.2 billion, which is just amazing. I still don't know how to really properly address the percentage thing, especially in cases like this. I guess I'll go back to minus. PE is 14, and that really surprised me because I really didn't think they would be making a profit at this point. Total assets $10 billion, total liabilities $3 billion, and a total stockholders' equity of $7 billion, which is up 35% from the previous year. So, as I said, I really did not expect them to be making a profit. They've been having losses for so many years that I really didn't think that this year would be the year that they make a profit. I really thought that it would be a few more years out. But obviously, the whole publicity around what Trump is tweeting on any given minute really drives up the users and really drives up the ad revenue. So I shouldn't be surprised about the earnings. And I was really surprised that their PE is so low. I would expect them to have a far higher PE. And given that there's so much room for growth, especially internationally, I think that the PE is more than justified. And as far as risk factors go, I really don't think there are any to name at this point. So they're kind of sort of competing against Facebook, but they're really completely different products, just like Twitter and YouTube are very dissimilar. So despite Twitter being a website that is very easy to write, so easy in fact that one programming tutorial has a walkthrough of just how to create Twitter basically from start to finish. So if one were to just completely clone Twitter, I think that they would have a hard time distinguishing themselves and kind of creating a bigger product. So I really don't think there's any risk factors right now, and I think that there's a lot of room for growth, especially in users internationally and in ad revenue everywhere, because the rates they're charging for ads are quite low, and that is the case all over the internet at this point. So to sum that all up, if you're a dividend investor, I think this is definitely not the stock for you. If you're a growth investor, I don't really think this is the stock for you because domestically, the user numbers kind of stagnate. Obviously, they're still going up, but they're not going up fast enough. So if you're a growth investor, I would also stay away from Twitter. But for a value investor, I think it's becoming more and more attractive, especially with a PE of 14 and a balance sheet that looks pretty nice. So I think that if you're a value investor and you have a 5 to 10 year horizon, I think Twitter is worth looking into and really do some research into what the ad rates are in the rest of the world and where they can go with everyone growing their numbers, their ad placements, their ad revenue. And I think that it really should be a fairly strong buy right now, considering the PE and the balance sheet and the growth. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.